Everyone wants to buy a cheap super visa insurance policy, but the quotes they get are expensive. Now, why is this quote costly or cheap? There are a few reasons for this. If you understand these reasons, you can choose the right policy and save money. The premium for a super visa insurance policy or a visitor policy depends on these five factors. First, the age. The premiums are set according to different age bands. You cannot change your age, but the other four factors are in your control and they can affect whether your premium is higher or low. Number two is policy duration. The premium for super visa insurance or visitor policies is calculated daily, meaning the daily rate is multiplied by the number of days coverage is needed. However, for super visa insurance, a minimum of 365 days of coverage is mandatory, so that nothing can be done about it. Visitors can choose to stay for a fewer or more days based on their needs, which can help save money. Number three is coverage amount. For super visa insurance, a minimum coverage of 100,000 is required. However, the visitors can choose coverage starting from 10,000 or higher as per their preference. But here's an important point to consider. In Canada, the cost of hospital room for visitor can be 3,500 per day, and if ICU admission is required, the bill can go up to $7,000 per day. So think about a $10,000 coverage would suffice in such cases. Number four is pre-existing medical condition coverage. According to policy terms, only stable medical conditions are covered. If you think your parents have medical issues but are not taking their medication regularly, or if there has been a recent change in their medication or treatment, then even paying extra for pre-existing medical condition coverage does not guarantee a claim. In such cases, there is no need to pay additional premium for this coverage. Therefore, when buying coverage for your parents, you should ask them in detail about their health. If their medical condition is not stable, there is no need to pay extra for pre-existing medical condition coverage. And number five is deductibles. Buying a policy with deductible reduces the premium but also reduces the benefit. You may have seen advisors advertising policies with 45% discount. This 45% discount means that if there's a claim, you will have to pay up to 10,000 out of your pocket. This means you will have to cover expenses like walk-in clinic visits or other minor costs yourself. But on the other hand, the premium you pay will be reduced by up to 45%. However, paying a higher premium doesn't guarantee that a claim will be approved, nor does saving money on premiums ensure that you will get full benefits from the policy. It's important to choose the right product based on your needs and eligibility so that if the claim arises, you receive it and the paying premium doesn't feel burdensome. And in case if you need more information about super visa or visitor insurance policy, give us a call at 416 726 0307.